Hi guys, in this level we'll start looking at the strategies that make up the DTP systems. The Forex Odyssey swing trading system comprises of the Paymaster strategy and the Escalator. The Escalator strategy is a classic trend following system. It relies on breakouts and trend reversals based on price volatility measured by the Super T indicator and moving average crossovers. The Escalator strategy works successfully on most timeframes. However, the Forex Odyssey system concentrates mainly on the daily chart for trade calls. Open positions are managed by the FXO Escalator POEA or Expert Advisor, which prints arrows directly on the chart indicating the break level and direction of the trade. Positions are entered via the Escalator buy and sell scripts located in NT4's navigator panel. To enter a pending order, simply drag the script onto the chart. The EA will set stop loss and take profit levels automatically, and if you use the auto size buy or sell scripts, it will calculate the correct position size depending on the percentage of risk you've entered in the EA properties window. The EA also adjusts stop loss positions automatically to trail price as it moves into positive territory. On the screen are examples of two escalator setups, a long, which is already completed, and a short trade which has recently been triggered. The red dashed line is the upper Super T, which indicates potential price resistance, and the green dashed line is the lower Super T, indicating support. For a long trade to trigger, the fast EMA must have crossed above the slow EMA, and for a short signal, the fast must have crossed below the slow. Let's take a look at a time-lapse video of a couple of actual setups and entries on the Aussie dollar Canadian dollar pair. In the video we can see an escalator sell signal setting up with price approaching the lower green Super T break line and the fast EMA having already crossed below the slow EMA. Once price closes below the green Super T level, a down arrow will plot. Essentially it is these two conditions, the close below the Super T and the fast moving average below the slow average, that are required before a valid signal to sell is generated. Once the arrow prints, you're free to enter a short position. To do so, simply drag the FXO Escalator Auto Size Sell script from the MT4 Navigator panel onto the chart. The EA will calculate the correct position size based on your risk parameters and enter a pending order to sell 5 pips below the low of the trigger candle, or the candle immediately preceding it, whichever is the lower. The EA will protect the position by setting a stop loss at the upper or red Super T line and will set 4 profit objectives. The strategy scales out 25% of the trade position at each of the 4 profit targets. Entry therefore requires a minimum of 4 microlots in order to trade. If profit 1 is reached, as it has here, the EA will close 25% of the total position and lower the stop to entry level for a free trade. From then on, the EA will trail the stop loss at the Super T level or the profit targets, whichever are closer to price. If price reaches TP2, the EA will close a further 25% of the initial position and move the stop loss to TP1. And this take profit trailing stop method will continue as price moves lower. If price continues down, profit will be taken at successive target levels and the stop loss will also move down accordingly. If, however, price retraces to trade entry level, the remaining 75% of the initial position will be closed. Here you can see that after partially closing the position at profit 1, price retraces to the trade entry level where the trailing stop loss closes the remaining contracts at break even. Now price makes a possible reversal to start trending up. To have validation, the fast EMA must cross above the slow average and price must close above the red Super T line, which it's done here. After entering a pending buy stop order via the Escalator buy script, you can see that a long position has been entered into the market. We see TP1 sitting at the 1.01357 level. If price reaches this level, 25% of the position will be closed and the stop loss will move to break even. Now remember that this is a daily chart and many days may pass before you see a positive result. All the while though, risk is being reduced because the stop loss continues to trail the rising green Super T. At last, price reaches the first profit objective and the stop loss moves up to the entry level. We still have 75% of our initial position open and are looking to scale out the remaining lots at 3 more profit levels. Profit 2 is soon hit and the trailing stop moves to the original TP1 level. Bang goes TP3 and the stop moves to TP2, 25% left. Will price reach TP4? Unfortunately, no. But not to worry, because our stop loss was trailing at the TP2 level and we've still been able to take significant profit from the market. Now, the escalator takes advantage of trending markets, but like any strategy, it can suffer drawdown in ranging or congested markets. To counter this, we have incorporated 2 operating modes into the EA. Mode 0 for trending conditions and Mode 1 for choppy conditions. Before I demonstrate how it works, please note that trading in Mode 1 requires experience in identifying market support and resistance levels, and therefore we recommend that you stay out of these trades until you have confidence in your abilities. Here on this Aussie dollar hourly chart, we can see that the market has entered a consolidating period and 2 previous escalator entries have failed, one to the upside and one to the downside. In the data list at the top left corner of the chart, you can see that the EA mode is set to 1, meaning that it's waiting for a signal to trade based on the trader's identification of support and resistance levels. To enter mode 1, the trader must set EA mode to 1, as it is here, and set both TP1 and TP2 to take 50% profit at each of these levels. TP3 and 4 should both be set to 0. When we enter positions under these choppy conditions, we should reduce our profit expectations accordingly. Using MT4's horizontal tool, draw a trend line about 5 pips above the highest, most recent swing high pivot. Open the horizontal line properties and change the name of the line to R-level so that the EA will be able to recognize this level as a break line to signal potential entry. Do the same for a support level by drawing a line about 5 pips below the most recent significant low. Name this line S-level to enable the EA to identify valid support. Now, if done correctly, the data list will change to reflect the levels at which the EA will generate new signals. As soon as price closes beyond one of these break lines, in this case resistance, a new arrow will print on the chart, and for this long entry, a pending order will be placed 5 pips above the trigger candle or the preceding candle, whichever is the higher. If price breaks the order line, as it has here, the order is filled and the stop loss becomes active. Profit targets are also set based on the exit parameters entered into the EA properties. In this case, TP1 is soon hit, with 50% of the position being closed. The remaining 50% will be closed either at TP2, or if price retraces to the entry level, it will be closed at break even. After some hours, TP2 is hit and the trade is closed. The escalator is a very easy strategy to learn, but it does require strict discipline to capitalize on extended trending moves. A major problem for new traders is the temptation to take early profits. It takes experience to handle larger than normal drawdown in congested markets and patience to be able to ride a super trend to completion, which is where the large payouts occur. Strict money management and diligent position sizing, utilizing a maximum of 2% risk per trade, we recommend even lower than that, will provide great opportunities for traders prepared to commit to the strategy. In our next tutorial, we'll look at the second of our FXO swing strategies, the Paymaster. Until then, bye for now.